Imagine a tech company, right? Not just growing, but actually doubling its revenue and profit year on year. In a market as dynamic, as competitive as India, you have to wonder, what's their secret sauce? Today on the Deep Dive, we're going to peel back the layers on exactly that. We're looking at how one company is pulling this off. We're diving deep into the Q1 FY26 earnings call of Netweb Technologies India. Now, this isn't just any tech firm. Netweb is really at the cutting edge. Think high-performance computing, private cloud, and the whole fast-moving world of AI systems. Their latest results, well, they offer some pretty compelling insights.
Yeah, absolutely. And our mission here really is to distill what's critical from that earnings call. We want to get past the usual corporate speak, extract the essential stuff about their business segments, get a feel for the industry outlook, understand their, frankly, impressive growth potential, and also, importantly, identify the key risks. Ultimately, what does Netweb's performance tell us about where AI and compute are headed in India?
Okay, let's dive right in then. Let's unpack those headline numbers from Q1 FY26. Revenue from operations. It saw this incredible surge, grew by, what was it, a staggering 102% year on year.
That's right, 102%, hitting 3.02 billion Indian rupees.
And profit after tax, the PAT, kept right in step, also up 100% year on year, landing at 305 million INR. I mean, these are genuinely striking figures.
They really are. And what's maybe even more impressive isn't just the top-line growth, but the profitability underpinning it. They're operating EBITDA.
Right, the core profitability measure.
Exactly. That grew even faster, up 127% year on year, reaching 448 million INR. And that translates to a really robust operating EBITDA margin of 14.9%.
And a PAT margin of 10.1%. Solid.
Very solid. And here's something else that really stands out from their financials. They operate with zero net debt.
Zero, wow.
Zero net debt and strong cash reserves. That financial foundation, well, it's a huge advantage. It allows them to grab opportunities, fuel this rapid expansion, without the usual financial bottlenecks you sometimes see.
That's a really powerful point. It's not just hitting big numbers, but how you hit them, the foundation underneath. So, okay, this kind of consistent strength, it makes you ask, what's the core strategy driving this performance?
Well, it really boils down to their very clear strategic focus on three core growth pillars. They're deeply invested in high-performance computing, or HPC. Then there's private cloud and hyper-converged infrastructure, HCI. And, of course, the big one right now, AI systems.
Okay.
And these areas, while they're distinct, they're also highly interconnected. They feed into each other, creating this kind of powerful synergy.
Got it. So let's start with HPC, high-performance computing. You mentioned they have a long history here, over 20 years.
That's right, a long track record.
So how significant is it now? What's its share of revenue, and what's keeping this relatively mature segment growing?
It's still foundational. HPC consistently brings in around 35% of their total revenue. So yeah, a big chunk. And despite its maturity for them, it keeps growing. There are a few key drivers. Domestically, you've got the National Supercomputing Mission, NSM 2.0 specifically. That's a big source of government demand.
Right.
But interestingly, we're also seeing increasing enterprise adoption across quite diverse sectors, actually. Think oil and gas, consumer durables. They even mentioned Daebrewer using supercomputing now.
Daebrewer, really? For what?
Yeah, for things like R&D, advanced analytics, and the automotive industry, too. But it's important to note, about 70–75% of this HPC segment still comes from government demand.
Okay, so still quite reliant on government projects there, but the enterprise side is growing.
Exactly. And that enterprise growth is key for diversification over the long run, balancing out those government project cycles.
Makes sense. All right, let's shift gears to private cloud and HCI. They called this a great booster. What's its role, especially with India's data center market booming?
Yeah, it directly plugs into that boom. For Netweb, this is primarily an enterprise play. Businesses are scaling up digitally. They need better data security, more efficiency.
Sure.
And private cloud and HCI solutions, which kind of bundle compute, storage, networking together efficiently, they become essential. Netweb's right there to meet that demand for secure, flexible IT.
Okay, now, here's where it feels like things get really exciting. AI systems. You said explosive growth.
Oh, absolutely. It contributed 29% of their operating revenue in Q1 FY26. That's up a massive 300% year on year.
300%. That's a phenomenal jump.
It really is. And look, AI's traction globally is obvious, but India specifically has this ambition, right, to become the AI factory of the world.
Right.
So Netweb's growth here is fueled by strong enterprise demand. We're seeing more adoption of LLMs, the large language models, but also SLMs, the smaller, more domain-specific ones. And then there are government initiatives, like the India AI mission.
And they pointed to a specific example, didn't they? A large AI order in defense.
They did. Details are confidential, understandably, but they highlighted its success, how it supported a key national initiative, bolstered India's strategic capabilities.
But they also noted, importantly, that such unique orders aren't necessarily repetitive, right?
Correct. It demonstrates capability, but you don't necessarily expect an identical order next quarter. It's more about building that track record in critical sectors. And to really boost their AI game, they launched Skyless.ai last fiscal year, FY25.
Skyless.ai. Okay, what is that exactly?
Think of it as a platform, a unified, composable GPU orchestration platform. Basically, it helps companies manage and optimize their powerful AI hardware, those GPUs, much more efficiently, get things deployed faster.
So it's software.
Well, it's sold as an appliance, so it's a tightly integrated hardware and software stack, not just software alone, and they use a perpetual license model.
Got it. Hardware plus software, perpetual license. That strengthens their whole AI offering.
Definitely, and it ties right into that broader India AI vision.
Okay, so looking forward then, Netweb sounds pretty confident about growth. They're guiding for what, 35–40% annual growth?
Yeah.
CAGR.
Yeah, consistent 35–40% CAGR. And what's impressive is they've actually maintained that rate for 9 straight quarters since they listed.
9 quarters. That kind of consistency says a lot.
It really does. And their confidence comes from what they call this pipeline-driven approach. See, their actual order book turns over pretty quickly, maybe 8 to 12 weeks.
Right.
But behind that, they have this massive pipeline, 4,000 crore INR.
4,000 core. That's significant.
It is. And crucially, they expect to convert about 60% of that pipeline, with deals closing anywhere from 6 to 18 months out. That gives them really clear visibility on future growth. You compare a 4,000 core pipeline to a 3 billion INR quarterly revenue. You see the scale.
Yeah, absolutely. Let's look at the revenue mix quickly. Q1 FY26, you said overall it was about 60% government, 40% enterprise.
That's right, overall. But interestingly, if you zoom into just the AI segment, it was different. Only about 23–24% government. The rest was enterprise-driven.
So AI is more enterprise-heavy for them currently.
Correct. And speaking of segments, that space and defense part, which included some of those big AI orders we mentioned, phenomenal growth. Went from 9 crore INR to 83 crore year on year.
Wow, 9 to 83 crore. That's driven by those specific large AI orders.
Largely, yes. So while that specific growth rate might not repeat every single quarter, it really underlines the strategic importance and, frankly, the strength of that segment for them.
Understood. So what about the India AI mission? You mentioned it earlier. What does that mean for future business? Is it already baked into that big pipeline?
That's a great question and key for the future outlook. They were clear. India AI mission orders are not yet included in their current pipeline or order book.
Oh, okay. So that's potential upside.
Exactly. Significant potential upside. They expect momentum from the mission to start building this year and likely continue for several years. It's a whole new avenue of growth that hasn't really been tapped yet.
Right. And thinking even further ahead, are they hinting at anything beyond AI? Like quantum computing, maybe?
They actually confirmed it. Netweb is actively working on a strategy for quantum computing.
Really?
Yeah. Now, details are, under wraps for now, as you'd expect. But it shows they're really proactive, thinking about the next wave, not just riding the current one. It signals a long-term vision for staying at the forefront.
Definitely thinking ahead. Okay, so with all this growth, this future potential, what are the core strengths enabling it? What's giving Netweb this competitive edge?
I think a really core strength is their consistent, serious investment in R&D research and development.
Yeah.
They put about 3% of their annual turnover back into R&D, and they have dedicated teams, roughly 75 people on the software side, 22 on hardware.
That's a significant commitment.
It is. And this investment in actually designing and manufacturing the latest products right here in India, that's key to their advantage. It lets them maintain higher margins, typically around that 14% operating level.
Right, compared to competitors maybe just reselling.
Exactly. Competitors often operate on single-digit margins if they're primarily resellers. Netweb's designing from the ground up. That R&D focus, building their own IP, it truly sets them apart.
That makes sense and seems reflected in those margins.
hmm
So let's talk a bit more about financials and risks. Those margins, are they sustainable? And what about working capital?
Good point. So Q1 FY26 margins were slightly higher, 14.9% EBITDA, maybe due to a good mix of smaller deals and a medium AI order, but they consistently guide for around 14% operating EBITDA and maybe 10.5% BT margin.
So they're not necessarily trying to maximize margin every single quarter?
Not aggressively, no. Their strategy seems more focused on providing value for money, growing market share, getting deeper into those large government R&D projects and a big Indian enterprises. It's a longer game than just margin maximization.
Okay, and working capital.
Typically, it runs between 90 to 100 days. Now, it might look higher in some quarters, like Q1, but that's often just timing. Lots of sales closing right at the end of the quarter pushes up receivables temporarily. They expect it to stay within that 90, 100-day range overall.
Got it.
Yeah.
Now, a common worry in this space is GPU pricing. The H100s, H200s, are falling prices a risk for Netweb?
They seem quite unconcerned about that, actually. Their view is that NVIDIA GPUs don't typically see big price drops. What happens instead is the market shifts to the next generation, like the B200s, the Blackwell platform.
So it's more about keeping up with the new tech.
Exactly. The challenge is often getting enough supply of the latest cutting-edge GPUs rather than worrying about the price of older ones falling. It's about continuous innovation driving demand.
That's an interesting perspective. Okay, last point, seasonality. Historically, they apparently had a 13 revenue in H1, 23 in H2 kind of split.
hmm
Is that still holding or is it changing?
Yeah, they acknowledge that's changing. The market dynamics are evolving. While they've kept up that amazing 35–40% growth rate consistently quarter after quarter,
Yeah.
the nature of their high-end enterprise business with bigger, maybe less predictable deal cycles makes it hard to stick to those old seasonal patterns for forecasting quarter-to-quarter splits. Their overall growth momentum seems driven more by market demand and strategy now, less by that historical H1, H2 split.
Okay, that makes sense. So let's try and summarize what we've unpacked here. Netweb Technologies is showing really remarkable financial growth. It seems clearly driven by their strategic focus on these hot areas, AI, HPC, private cloud.
Absolutely. And supported, crucially, by that strong, consistent R&D investment and a very robust, forward-looking sales pipeline. That pipeline gives them real visibility.
Right, clear visibility into future revenue.
And this deep dive, I think, really highlights that fascinating interplay you see in India between big government initiatives like NSM or the AI mission and this burgeoning enterprise demand for advanced tech.
Yeah.
NetWeb's ability to navigate both those channels, deliver value, and find growth in both. That seems to be a key differentiator for them in a tough market.
So here's a final thought to leave you with. Given Netweb's consistent growth track record, their solid financial footing, and this proactive stance on what's next, the AI mission, even quantum computing, how might their path actually shape India's ambition to be global compute and AI powerhouse in the years ahead? What really stands out to you about how they're tackling this incredibly fast-moving market?